Italy's debt market shook off a bout of nerves induced by the threat of political upheaval with a solid bond auction on Tuesday that drew the line under a sell-off seen the previous day. Data showing the Spanish economy shrank slightly less than expected in the third quarter, and selling of safe-haven German bonds at technically important levels also helped to shore up debt prices across the Eurozone's struggling states. Investors' attention, previously fixed on Spain, had turned back to Italy after former Prime Minister Silvio Berlusconi threatened at the weekend to withdraw. Thank you for trying verbose. This recording will go away once the product has been purchased. Support for Mario Monti's technocrat government before elections in April. ID:" and L5E8LR13F. However, the selling scene on Monday stopped and Italy issued €7 billion of new 5- and 10-year bonds at its lowest cost of borrowing since May 2011. Berlusconi is seen as a loose cannon. It shows that the political picture in Italy is still pretty clouded, but I don't think it is affecting Mr. Monti's rule for now, RIA Capital Markets bond strategist Nick Stamenkovic said. The Italian 10-year bond yields were 1 basis point lower at 5.00%. Having thank you for trying verbose. This recording will go away once the product has been purchased. Risen 10 bps on Monday and about 25 bps in the last 2 weeks. 5-year yields dropped 6.5 bps to 3.83%. German bond futures settled 16 ticks lower at 141.54, having earlier risen to 142.00, a level at which traders noted renewed selling interest, indicating an aversion to pushing prices through the technical barrier of the round number. Traders said activity tailed off throughout the day, with U.S. bond markets closed due to Giant Storm Sandy which battered the country's east coast. The Italian politics. While the thank you for trying verbose. This recording will go away once the product has been purchased. Impact of Italy's internal political battles on bond markets was limited. Pressure may increase on peripheral issuers in coming months as elections draw nearer, analysts say. With elections coming closer, it will be more obvious that reforms have not been implemented and the real problem in Italy is politics. The periphery will suffer again, said Norbert Wank, rate strategist at Bayerische Landesbank. Nevertheless, 10-year Spanish yields were steady on the day at 5.66%, and may even outperform Italian bonds despite the Spain's more perilous debt problems. Spanish debt is expected. Thank you for trying verbose. This recording will go away once the product has been purchased. To rally sharply if Madrid activates the bond-buying support of the European Central Bank by requesting an external aid program from the Eurozone's rescue funds. While the government continues to resist such a move, markets still see it as inevitable. That means the 68 bps gap between 10-year Italian and Spanish bond yields could be set to narrow, with Italy expected to fiercely resist asking for a bailout that would allow the ECB to buy its bonds as well. People are going to be looking at getting those compression trades on between Spain. Thank you for trying verbose. This recording will go away once the product has been purchased. And Italy now, if you leave it to the day when the ECB starts buying, it'll be such a fast move that you won't be able to get on it, a trader said. The spread between the two bond yields has already narrowed by around 60 bps since the ECB first hinted at its support in July.